Good day, everyone. Welcome back to my channel. So today we'll be discussing about documents and the books of prime entry, one of the key topics while you are starting your accounting journey or Igcse accounting. So let's have a look. So what is a document, particularly business documents? So business document, like what we know here and what we see here, is something like the ones that we see in our daily life. When we buy things in 7-Eleven, Family Mart, grocery stores, we will have one paper after we make our purchases. And what's that paper called? We love to call it receipts. So to be honest, there are lots of kind of the so-called receipts out there. It has its own special names. Anyways, we will need to know what is actually the purpose of a document. So a document basically is a written proof. About what? About the transaction that just happened between you and the seller. All right? It must be kept. You have to keep it in a proper place, a safe place, and for nowadays, you have to scan for safety purposes and as well as a backup. Because you know why? Some receipts, its ink will fade off as time goes by. So these business documents, it will be able to provide you with what? It provides the information needed as a what? As a references, as well as for accounting data entry. Entry to where? Into your books of prime entry or into our computerized systems. Okay, nowadays there's many kinds of accounting software and all the things are all in the e-form because we want to save paper. So the business document will provide you the date at which these transactions happen, details such as quantity, order, the price that you bought or that you sell, or the money that you receive, all kinds. And it has sequence numbers. The bill number at the top corner somewhere here, it will provide you the sequential number. And you'll be able to know, especially in the real business world out there, the debts owed to people or people owing you. These are some of the purposes of a document. Now, this document, remember just now we say that we have to record them into the books of prime entry. So these books of prime entry are our first line of recording. The first line of recording, as in our bookkeeping starts right here. So it is quick. Okay, it can help you to reduce errors because you do not need to one-shot record each transaction for a document into the so-called ledger. Only we post them into the ledger normally at the end of the month. So you do not need to go into the hassle of every time once you receive a document, you straight away record into the ledger. No need. Okay, we'll be talking about ledger later on. So this is done daily. And I advise everyone to really do this daily. That's why sometimes these books of prime entry, we love to call them as our day books. Because like one of them is called the journal. The journal is something like our diary. This is our day books. We have the sales journal, the purchases journal, the purchase return or the so-called return outwards journal. We have our sales return or the returns inwards journal, or instead of the word journal, they will replace it with day books sometimes. So the terminologies are interchangeable. We have also our cash book where we record on the spot payment and on the spot receipts, okay, where we receive money. Journal normally will be on the credit transactions. And if there is some kind of a transaction that happened and we could not put them into the journal, any of the sales, purchase, sales inwards, or the purchase returns journal, the cash book or the petty cash book, we cannot record any one of them there. We record into the general journals. Okay, so cash books is for recording of cash. Petty cash books is a book that record tiny little cash expenses. So cash book normally big expenses. Petty cash book normally records small expenses. Okay, that's what you call petty little things. So this is document and books of prime entry. So let's see what are the types of documents and the relevant books of prime entry that we normally use. Let's see. First, for cash transactions, meaning on the spot payment or on the spot receipt of money. So what we have here, one of them is our receipt. So sometimes this receipt is called as the official receipt. When we pay our debts to our supplier or our customer pay their debts to us. Okay, so definitely there will be a buyer and also a seller, depending you are looking at whose point of view, POV. So therefore, this receipt can be something that you get or you pay. All right. So Weaving Shed, 14 Industrial Street, Hightown, received from Sue and Sue the sum of $351 by check. Right. So a check will be as this. This is the check. Here's one of the check. Okay, so Weaving Shed pay money. No, Weaving Shed receive money from Sue and Sue. So if you are Weaving Shed, this receipt will be a copy, and Sue and Sue will be your customer. If you are a Sue and Sue, then this receipt you receive the original ones, and you are paying to Weaving Shed. So depending on the questions of the exam, right, you need to see whose point of view you are looking at, and hence determines the answer. Okay. Now we also have a check here. Okay, so this check is a checkbook. There's a book normally for those people who are having businesses and those who are open current account in the bank. Okay, so you have a checkbook that you can purchase for like 10 to 20 bucks. And once you write your check, you write all everything, who you want to pay with. Okay, how much is it? Okay, the bank account number at the behind of the check, you write the bank account number. Okay, the date and all everything. So this checkbook has two parts. The first part is the check counterfoil, and you have these kind of lines there, and you are able to tear off the actual check from the portion of this check counterfoil. So the actual check, you tear it off, and then you give it to who? You give it to the person who is receiving the money. In this case, you are paying to Weaving Shed because you are Sue and Sue. Okay, so you'll be left with the check counterfoil with you as a copy for you to know how much you pay who and how much who you pay to and how much you have paid at the date as well. And the purpose, some of the check will have this one here, the purpose for what. Okay, so the actual check, you tear off, you give it to people. And once you see check, definitely is always a money go out things. Okay, receipt can be depends who you receive the receipt from, or you give the receipt to who. Now, we have a cash register till receipt. So this is also another kind of receipt. When you buy something from 7-Eleven, like in this case here, Target, okay, you buy something worth 535.85 cents, and this is your receipt that you get, and also a payment done. Okay, so a check normally is money go out. Okay, receipt from the supermarket, also money go out. And receipt, it really depends. It can be money go in or money go out, depending whose point of view they're looking at. And normally, money go out and money come in on the spot, you record them in the books of prime entry known as cash book. So a cash book has two parts. One is the debit side and one is the credit side. The debit side will record money incoming, and the credit side will record money outgoing. Okay, basically money in and money out. And you record the date, okay, and what is it about. So this is what it is about that you have received, and what is it about that you have paid. Okay, so you'll notice that this cash book has both sides, and so there's a bold line in the center, and this is a T shape. So a cash book is not only just a books of prime entry, it is also a ledger account. Because you see, we have a balance brought down, meaning the balance at the beginning of the day, and then the balance carried down, which is the balance of money left at the end of the month. Yeah. So we have 3 columns. So sometimes they call this the 3-column cash book. If the cash book has only the cash and bank column, so therefore it's called a 2-column cash book. Discounts over here is discounts received when you receive, discounts given when you receive money from your trade receivables. So this is called the discounts allowed. It is actually a kind of expenses. And these discounts will be discounts received. When you make payment to your supplier, you might receive discounts. Okay, so this is your cash book. Money go in and money go out. You record them there. Okay, so this is your cash book. Next, we also have petty cash voucher, and hence we have our petty cash book right here. So a petty cash voucher is issued by a petty cashier. So the person who in charge of cash book, 1%. Another person who in charge of petty cash book will be normally the junior accountants. Okay, so petty cash, the name suggests petty means small. Small expenses, they will have a very cute little, Mickey Mouse box. Okay, Mickey Mouse box. Inside there have many cash. Okay, normally about like 100, 200 or 300 cash or petty cash. And we have also petty cash voucher. So how does this work? Okay, petty cash book works on the system called the impress system, whereby at the beginning of the month, there will be a fixed set of money. We call it float, which is fixed at the beginning of the month. They will allocate, okay? Your chief cashier will allocate a sum of money into the box every month, in which after you all have decided of an amount that you're going to make it as fixed one every month. And then, as expenses made, daily, how does it work? Okay, maybe first somebody went out to buy some drinks. Okay, and then after that, that particular person have a receipt from 7-Eleven, let's say. And then that particular staff comes to you, the petty cashier. Hey, I want to claim some money from these expenses, please. 28 bucks. So the petty cashier will look at it. Oh, okay, so your receipt, please. Okay. Oh, so 28 bucks. So what do you buy? You buy Milo, you buy Nescafe. And then, okay, there you go. Okay, let me issue out a petty cash voucher. Okay, right. Okay, please sign. Okay, and then I give my manager to sign. Okay, and after that, petty cash voucher has a 2 copy. The original copy will be tear off and given to you as the staff who want to claim it, as well as you will be giving the staff the 28 bucks, and then you have a copy of a petty cash voucher in your petty cash box along with the receipt gotten from the staff. Staple it up. Okay, so as this happens day by day, at the end of the month, you will sum up everything into its category. Postages, normally for post office, parcels, fares or traveling expenses, Grab car, Uber, LRT, or maybe petrol pump. Okay, you pump in the petrol. There will be anything that relates to that will be classified under the fares. Stationery, you know what is stationery. General expense, maybe office expense, drinks, fragrances for the office, like let's say MBPO. Okay, you want to do some how to say maintenance of office. You hire somebody to clean the office. You hire somebody, a plumber, to fix the sink pipe, or anything that's something to do with the offices, as long as it doesn't relate to postages, fares, or any stationery. And then we also have our ledger account. Normally, ledger account will be talking about, here we have loans. Other than loans, we also could have drawings. Okay, let me write other places over here. It can be loan, drawings made by the owner. Okay, well, it should not happen though, drawings. It's very little. Loan to who? Employee. Okay, normally loan to employee. And then it can be also donation to old folks home, or anyone who come up to your office to ask for any kinds of donations. That sometimes happens out there. There will be some organizations suddenly come up to your office and ask for donation for any NGOs. And then also they can use the petty cash book to pay some money to trade payables. Maybe those trade payables or some sort of a payable which are very tiny little things ones. Yeah, normally this will be the ledger accounts part. So everything will be classified under these different expenses of classification in order for you to track what are your expenses that you make most of the time. Okay, you want to control the expenses. So this classification can also help in that way. Other than that, it can help you to make your calculations much more accurate, because imagine every day there's a lot of expenses from day 1 to day 30. If you press your calculator, you might make some mistakes if there is any kind of single instructions made to you. So you have, instead of calculating 30 kinds of expenses, you only press your calculator 1, 2, 3, 4, 5. 5 things to press on your calculator. That's all. And therefore saves time and increases accuracy. So this is the payment made. Then the beginning of the month, you have 100 bucks, the float in your box. You minus off with the amount that you have made the expenses. Balance left is 20 bucks. You bring down. Okay. And then after that, you will replenish, or there will be a recruitment made to refresh your petty cash box from 20 bucks to go back to the 100 bucks in the beginning of the following month again. So that is the impress system made here for the petty cash book. So this is for our cash transactions. Okay. Then moving on, credit transaction. Credit transactions is where we get our goods now and then we pay later, depending whose POV that we are looking at. Okay, the first one we have here is called an invoice. An invoice is used between supplier and the customer, where they transact things on a credit basis. So normally, the name at the top here, like we see here, our grant, will be the supplier's name. Normally at the top will be the supplier's name or the seller's name. And then the ones below here, to who, will be always the customer. Okay, we'll be having a lot of kinds of information such as telephone number, address, okay, what they buy, how much, what they buy, how many things they buy, how much per unit, how much the total. So this is the list price. Okay, the seller's price. And then we have something called the trade discount. So a trade discount over here will mean the discount given to encourage bulk purchases. Okay, meaning if you buy only one, I charge you 10 bucks per item. But if you buy the same item, but you buy 3, I charge you 8 bucks per item. Oh, so that is the trade discount. Okay, now you see also here terms 1.25% for cash discount. So cash discount will encourage you to encourage prompt payment, meaning faster pay. The faster you pay, the more chances you can get this 1 and 1.25% of cash discount. Here the terms is if you pay within 1 month. So good thing. So you have 30 days time. Okay, within the 2nd of September. There's 30 days time for you to pay. Okay, so if you pay within 1 month, instead of paying 2R grant 560, you'll be only paying, okay, you'll be taking 560 minus off with 560 times 1 and 1.25%. Okay. So this will give you a $7 of discounts received. So you only pay 553. So this is the cash discount in which you record them here. Okay, let's say over here, let's say this is September, we pay on the 20th, we pay our grant with only, let's say we pay by check, we only pay 553 because we receive a discount of $7. Okay, a 7 here and then 553, depending you pay by check or you pay by cash. Then you write the RG. Okay, that is the way to record into our cash book once we make payment. So when 2 of September happens, this transaction, we just record where? Okay, depending whether it's a sales that happen or whether it is a purchases that happen, depending on whose point of view. Okay, you record into the sales or the purchase journal. Record the date, the details. The details will be the person's name. If let's say you are the Pool and Co, this invoice will be your purchases because you buy something from our grant. So you're going to write them into purchase journal. The date, the details will be our grant. Okay, document number, we have a document number. Do we have here? Invoice number 30756 will be the document number. The total will be 560. But if you are our grant, okay, this invoice will be your copy. Then the Pool and Co, the name will be recorded into the sales journal instead with 560. Okay, depending whose point of view that you are looking at from. Okay, so be careful. So this is our invoice during the purchase or sales that we. Okay, now let's look at debit note and credit note. Okay, debit note and credit note. When you use them, it is during when your invoice has some issue. So if invoice has problem, like errors and so, how you're going to use debit note and credit note. So what's the function of a debit note? Okay, debit note has 2 functions. Okay, let's state. If it is undercharged, so we use debit note to value your debt upwards. Okay, if it is undercharged because you lack of something, the supplier forgotten to charge you something extra, or they calculated things wrongly. Okay. Now, if they say the invoice has some sort of a problem whereby it is overcharged, okay, overcharged, then a credit note will be used. Overcharged, or you want to return something. You want to return something. Why you want to return? Why? Spoil, expired, wrong sizes, wrong color, wrong brand. So you want to return off. So first, now you're going to use debit note as a courtesy sent to supplier to request for a reduction. Reduction of your invoice, reduction of your debts. Then, upon approval by supplier, the supplier will then issue credit note. Okay, so this is quite special ones here. So only upon approval, then you record this credit note into the purchase return or the sales return journal. Okay, so if it is from this point of view, okay, this is me. I return something to my supplier. Me will record this approved return of the credit note amount. Let's say 4,800 is being approved. I will record it into my purchase return, and supplier will record them into their sales journal, sales return journals. Okay, because sales return means customer return things to me. Purchase return means I return something to my supplier. Okay, so let's see here. There's a debit note. Okay, CU to Waving Shed, CU to Waving Shed. Okay, so they request for a return of 4,800 because wrong color supply. After a few days, okay, this is on the 6th April. Then after a few days, on the 9th April, they approve this request of return. Okay, so 4,800 will be then recorded into the purchase return or the sales return journal. Once you see a debit note about returning stuff or to request for a reduction because of overcharges, you do not record the debit note. Only when credit note was received, then the amount you record. Because if let's say in your debit note, you request for, let's say 6,000, let's say, and later on, they don't approve the 6,000, they only approve for 5,000. So only this is the one that you record instead of the 6,000 that you're asking for a return. Okay, so be careful for that. Only upon approval with the credit note. In the beginning, when you send debit note, it's just only a courtesy. It's like, hey, excuse me, can you help me reduce because wrong, I don't think I want this. Sorry, that kind of feeling. So only when they approve, then this credit note you record. Okay, now debit note has multifunctions. Okay, one is to increase your price. Okay, because instead of reproducing another invoice, they use debit note instead. Okay, so you inform your supplier, and then your supplier will issue debit note to increase your invoice amount. So this is for our credit transaction. So these are some of the documents and the books of prime entry that we'll be seeing in your syllabus. All right. So we stop till here. More details will be shared during our classes online. Okay. So if you're looking for tuition out there, feel free to contact me and I will liaise you to my receptionist as soon as possible. Yeah. Don't forget to like, share, comment for this video if you find this video helpful. Thank you, everyone. See you in our next video. Ta-da!